here with Marie Walker, who is Open Futurist at Raidiam. And of course, it's been a few weeks since we had the Every Data Open Finance Smart Data webinar. So it was a good opportunity really to do some follow-up. And Marie has also just come back from Miami. So I'm going to
Somebody had to do it. Yes,
I'm
not
sure
the worst place I've been on business.
I'm sure it wasn't all pina coladas and sunshine.
No, definitely sunshine, more on the margarita side, but obviously not during working hours.
Great, I'm sure you had a lovely time. But let's talk a little bit about your experience there and what you did. And yes, I think it was over 1,100 attendees, so it was quite a crowd, and there would have been an awful lot of ground that you would have covered. So just tell us a little bit about the flavour that you took away.
Absolutely. So the event was FinTech Americas. It's the largest banking event for the LatAm countries. They all gather in Miami, but the event itself was held in Spanish with dual translation and a few English-speaking presenters like myself. And it's a phenomenal event, very well staged, very cool, and it attracts an extraordinary audience. I think there were 30 CEOs or equivalent level from banks from LatAm. There were about 15 regulators. So that sets the sort of scene for the sort of level of seniority. I was lucky enough to be chairing a panel of regulators. We had Brazil, Chile, and the US Reserve Bank. So a very interesting mix.
Impressive lineup, yeah.
Heads of innovation or the people running the open banking process. Obviously, open banking, open finance, open consented data sharing is my specialism, but we were also talking about AI. We were talking about how they collaborate with fintechs. So it was a really sort of broad discussion. And very interesting to get the LatAm perspectives as well as how the US are approaching things.
Well, I was about to ask you just that question, of course, because you're bringing a unique UK perspective, but of course different countries will do things differently. So I'm just wondering, in terms of some of the cultural differences, what kind of stood out to you?
The differences in terms of how the regulators are approaching innovation depend on whether they're going to take a hands-on or a hands-off approach. And actually that's common to the decision that any regulator needs to take around the world. What was very interesting with the US, because of course they've got the CFPB putting through the 1022 bill at the moment for open banking, to enable open banking with consumer data. We're expecting that this autumn. It was very interesting to actually have the central bank of the US there, to hear how they were approaching it. And it's very much a market-led initiative still. So they're going to put in the protections and the responsibilities for the industry, but they're not going to have a centralized technical delivery plan. They're going to leave the market to do it itself. So, and very much consumer-led demand for open banking, which strikes me that it would be quite slow, and particularly because they're only enabling data sharing of consumer data at the moment, not business data. And as we know, small businesses in particular are very quick adopters of open banking because it saves them time and money. So it'd be interesting to see how it plays out in the US, but I think we're quite a long way from seeing a quick adoption of open banking in the same way that the UK did with the very restrictive, very prescriptive mandate that we took.
So let's just take on, or to draw out some of those bits on industry-led and consumer data, because of course there are lots of ways in which along the value chain data sharing can happen. And how do you think they've kind of isolated or honed in on those parts of the value chain which are most?
I think the basic principle is building on the Dodd-Frank Act previously, and that's a recognition that the data that's held by banks and financial institutions is about and therefore belongs to the individual, whether that's a business or a consumer. So it's that data right, if you like, that they're creating the value around. Interestingly, if you want to annoy an American, you say that they haven't got open banking, and then they start jumping up and down and saying, we've been doing it for much longer than you have. and that's right in a sense, but what they've been doing is screen scraping. So screen scraping, I'm sure most of the audience know this, but it's the use of somebody's password and username in order to pretend to be them and access their account on their behalf, and then scrape the detail back into whatever product solution you have. The banks actually hate that so much, they have voluntarily built their own open banking APIs. So open banking obviously does exist in the spirit, if not in the way that we understand in the US. The way that it will roll forward now will be with more guidance from the regulator, standards authority. The Financial Data Exchange, FDX, is hoping to be that standards authority, but we're not going to learn who the standards authority is or whether there'll even be just one of them until we get the resolution from the CFPB. But in terms of value cases, it's about leveraging that access to data in order to have a better, fuller view of your entire finances. You can then use that to get access to loans, credit, etc., and other services that you might struggle to get hold of just on the conventional way that it's looked at. So particularly good for people like the gig economy workers who don't have a conventional earning pattern.
It is the transaction.
Exactly.
Industry.
So I don't think we'll see any new use cases that we haven't seen already from elsewhere in the world. But this is the first time that it will be pushed forward with specific standards for the APIs and the legislator requiring this of everybody.
Which is in parallel to the approach that we've taken in the UK. So that's probably a good point at which to start talking about some of the materials which both the UK government and the regulator have published in the wake of our webinar. The first being the Smart Data Roadmap, but also the JROC, the Joint Regulatory and Oversight Committee consultation document about the future of the open banking implementation entity. And I think on the, let's start with the Smart Data Roadmap, because of course there's an awful lot in it. It's quite complex, and I think this was why I was wanting to just touch on that point around value chain, because one of the challenges, of course, will be identifying what to prioritise, what to take forward, I suppose, first. Now, the government have highlighted energy, which I think is, and fuels, energy and fuels.
Yeah, so transport, retail, banking, finance, property. I'm sure there's what I'm missing, but yes, those telecommunications.
Telco, that's right, yes. So of course, I think in the first instance they're going to focus on energy and transport out of all of those, but that's not to say that there aren't pieces of work that are being progressed across into those other sectors. And just going through that consultation document, it struck me that this is going to be a slow process, not least because, of course, a lot will depend on parliamentary timetabling, given that the Data Protection and Digital Information Bill hasn't yet received royal assent. We hope it will soon. But of course, we've also got a general election. So it's kind of a good start, but how do you think it will unfold as the year goes on, and certainly over the next couple of years?
Big question, and I think the point to pick out in all of that is that it's incredibly early. Nobody should be betting their house on a fintech strategy that's smart data entirely at this point. It's going to be quite a while before it becomes ubiquitous. The smart data bill, basically the DPDI you just mentioned, we are hoping to have that soon. I mean, they said spring 2024. We'll see, but that sort of sets the groundwork for data sharing, consented data sharing across these multiple sectors. One of the key enablers for that, or considerations for that needs to happen before you can really leverage the power of smart data, is interoperability across the different sectors, and also having that value proposition, that use case that makes sense. So one of the things that I'm particularly excited about, because I think it's a very relatable use case that everybody can get behind, is the digital home buying. And the Department for Levelling Up Housing and Community, DULAC, have budget from the previous autumn statement, and it's in the Smart Data Roadmap that they will be announcing a pilot for this summer.
Right.
So,
Okay.
and the interesting thing about that is that not only is that benefiting the housing sector, but it brings in other sectors as well. It's cross-sectorial, so you've got the lender from the finance sector, insurance, you've got estate agents from the retail, arguably retail or property sector, etc. Everybody you can think of that's involved in purchasing a house, and then digitising that whole process so that it's much quicker, less risky, less costly for the consumer, and unlocking the value in the property market. It's hugely beneficial for the economy, for property developers, for anybody that's trying to sell and make that process much easier. So that's an easy, relatable one that's coming.
Yes, very helpful to have something tangible to be working with in terms of trying to identify what the practical steps are, particularly because they're going to be working across sectors and across disciplines as well. And I think as I was reading the Smart Data Roadmap, it struck me that we've got a number of different government departments involved in taking forward the whole process. So getting them to work and collaborate with one another is also going to be
and working out what data they can need to share internally and with the market as well. So actually that also comes into the home buying process. Data on property is currently siloed across, I think it's 7 different government departments, and
really,
that's not joined up at the moment. So you've got land registry, you've got tax, etc. Yeah. So there's going to be a move to open up that data as well, obviously always appropriately with consent and so forth, but that mobilising the value of the data in the economy, the industry and the government is pivotal. The other thing I'd say about how quickly we're going to progress, or what we'll see first, I think it'll be relatively sort of baby steps. So as well as the Smart Data Roadmap, there is a Smart Data Council and there's a Smart Data Challenge.
I was going to ask you about the Smart Data Council.
So, well, on the Smart Data Challenge, this is to get people starting to think about what's possible and starting to innovate and so forth. And what we've been saying with the Smart Data Challenge is that you don't need to have a complex smart data use case. You could just think about what it is that your product or service does at the moment and how you could improve it by access to just one different set of data from something outside of your reach at the moment.
Existing data set with something completely.
Exactly. So, a very, very simple example where we already have a blend with embedded insurances, things like travel and insurance, they just fit beautifully. I shared a news headline this morning about a motorhomes company in the UK who is now offering weather protection insurance. So if your UK staycation is not the brilliant weather you're hoping it is, you get an automatic, you don't have to do anything, it automatically generates a payout based on the insurance that you've taken out. So, it's just making people's lives better. That's what this whole thing is about.
And making those connections in terms of the data sets as well, and thinking of new and imaginative ways of which.
Yeah, exactly. And that's embedded insurance. It's not smart data just per se, but it's just looking at how you can bring these different sectors together to create a solution as opposed to a series of individual products and services that you consume individually. We don't, we've spoken about this before, back to the digitised home buying, you don't buy a mortgage, you buy a house. It's thinking about it that way.
Everything about Smart Data Council, and of course they've got an important role to play as well. And interestingly, they've also put out a response just recently, I think, to the roadmap. Do you want to perhaps just say a few words about that?
Yeah, so the Smart Data Council was set up as part of this Smart Data Initiative. And it's a blend of government, regulators, industry, thought leaders.
Just the non-governmental.
It is, yes. So their role really is to apply their collective experience to thinking about how actually is smart data going to be rolled out in the UK, what's important for the legislation and for the government to enable, to support or to protect or whatever. So they've been looking at things like use cases and technology and consent and appropriateness and interoperability, all of these different issues to advise and steer the government. So they weren't actually authors of the Smart Data Roadmap, which is why they then responded with their points that they wanted to have taken into consideration. And it's things about, you know, making sure that you are taking appropriate steps in terms of not trying to be everything to everybody straight from the outset, making sure that interoperability is thought about, because that's where the real value will start to come from cross-sectorially. So how are you going to do that? They were talking about the value and the necessity of having trust frameworks to govern the secure, appropriate access to data with certainty that you're sharing data with authorised entities who have the correct permissions and roles and so forth. So that's really what they've been doing. They've been thinking about the difficult, you know, bits to get right, and then sharing that back with us.
That's really helpful, not least because I've just remembered what it is that I wanted to kind of comment on, and perhaps for you to comment on as well, which is around people's understanding of smart data. And you kind of alluded to it in terms of this is insurance and embedded insurance as opposed to smart data. But of course, we're talking about open data. But you know, we have things taking place in terms of open banking, which kind of originated out of payments, and then we have, you know, moving across into open finance, which is to do with, you know, what's going on in, I suppose, the financial services sector. When it comes to smart data, but nonetheless, there may be a financial element to it. It's kind of how we can, I suppose, take the lessons then from open banking, notwithstanding, of course, that we're now moving across into these other sectors. I mean, is that your understanding, or?
Yeah, so if we look at, let's jump to Australia for the moment with the consumer data right. They've tried to do smart data from the outset. They started with banking because banking is heavily regulated. Most people use it, not everybody, I should say. But it's heavily regulated. A lot of people use it, and finance is the underpinning of so much of what we do. But they also enabled energy, or tried to enable these other sectors at the same time. That's what the UK are doing now, is they're trying to apply the same principle, that it's the consumer's data that should be working for them to their advantage, as opposed to being siloed in the different institutions. And it unlocks competition and it unlocks innovation. So the DPDI bill is going to give ordinary businesses access to the sort of breadth of data that's previously only been available to the big techs. So if you think about it that way, it's unlocking innovation and it's unlocking creativity and competition, but crucially all for the advantage and with the permission of the individual. So that's what we're doing. In terms of how we get there, it's more complicated than that, but the good news is the technology does exist. So what was built for open banking can be repurposed. It's not specific to banking. It's a principle of data sharing that can be repurposed. Lessons that we've learned in the UK that is now feeding into European legislation and also JROC recommendations. There are lots. I mean, there's a particularly complex problem about how this was all funded. Famously, the 9 biggest account holding banks and building societies paid for open banking and are still paying for open banking.
I see what you did there. So we've kind of segued into the JROC, the Joint Regulatory Oversight Committee consultation document.
Yeah, so a lot of these learnings from that, as you said at the very beginning, are absolutely intrinsically linked with smart data. So funding is an issue. That's a whole new webinar to talk about, but we should hear soon. I think June is what I was told, from Open Banking Limited about direction, what the funding might be.
So is this for the interim entity?
Yes, so for the benefit of people who haven't been nerding about this quite as much as we have, you've got the Open Banking Implementation Entity, now Open Banking Limited, which is the original interim,
OBIE.
which is the original OBIE. They are the current entity and they are continuing to do the mandate for open banking. So they're continuing to manage that whole process. There'll be an interim entity set up, which is separate but parallel, which will manage open finance, so beyond the mandate, and it will also start looking at smart data. And then they will merge together at some future point into the future entity, which will manage everything. So that's what we're sort of looking at.
So the interim entity is beyond open banking.
Yes.
In effect.
So Open Banking Limited will continue with open banking.
But it will still be OBL, Open Banking Limited, who will take forward that mandate.
Yes.
Yeah, so that's
and
a little
the
bit
interim entity will be everything beyond the mandate. So starting specifically with open finance, but I'm guessing it's going to be moving on to smart data unless there's another entity aimed for that.
Well, that's one of the questions, I suppose, that has arisen out of the Smart Data Council's response in terms of
the need for an entity.
The need for an entity, how many, and then also
an
ecosystem
in terms of controller,
the scheme design. So that for me was something that's kind of out there, hanging around, which has yet to be answered. And it's interesting then that, of course, when it comes to the financing, because at the end of the day, these things do need to be, you do need to find a financing resource for them, where that might come from, given that we're talking about a cross-sector kind of approach.
Yeah.
So that is a little bit of a conundrum.
It is, and I think the sort of popular opinion at the moment is that each sector is going to have its own trust framework, and they will be interoperable with each other. So some of the sectors have got specific regulators, like communications and Ofcom, etc. So having an ecosystem controller of a trust framework that sets the rules, the standards, etc., that are appropriate to your industry, and perhaps charges a fair usage charge weighted by size of participant. We're talking about data providers and data receivers, not consumers here. So in banking parlance, banks and fintechs or TPPs. So that might be one route. And then there is a standard already for interoperability between trust framework ecosystems, which is the OpenID Federation. So that might be one way it's dealt with rather than a single centre for the whole. But I think we've got some way to go before that becomes clear.
For sure, yes.
But one thing that's very interesting from both JROC and the Smart Data roadmap is another thing that the UK didn't get particularly right with open banking, and this is linked to the way that it was mandated and the way that we progressed more quickly than Europe. So it's a positive in one sense, but there was more stick than carrot. So this links back again to how it's funded. Yeah. The incentives weren't thought about. So now it's become clear that if you're going to have a healthy ecosystem where everybody is actively participating and willing to share their data, willing to share the customer data, and proactively innovating and collaborating, you need to have incentives like reciprocity. So if you have a data provider that's sharing data with a third party, and as a result of sharing it with that third party, they get enhanced data insights back that benefit them, then you can see it's a symbiotic relationship, and that becomes much more sustainable, and people invest in it, people go beyond compliance, and that's when we really start to see some great innovation. So things like incentivizing through reciprocity, things like being able to monetize the APIs, particularly premium APIs, so that people understand the value and really commit and really go that extra mile.
So there's a lot going on under the bonnet there, isn't there, in terms of some of the nuts and bolts that need to be thought through. And then
which is what the Smart Data Council, that's their role. They're thinking about, where are the obvious wins for consumers, for businesses. What can we, hold out as an example of smart data that would be welcome and easily adopted. So a classic example from open banking, a few years ago, no accounting software providers had bank integrations. Now they all do. If they didn't have a bank integration through open banking, they wouldn't have a business model, because no small business would sign up with a software provider to do their accounts if they had the option of going to one that had bank integration.
It's really massively insightful and interesting.
You're very
so
kind.
great to have you sitting here and so I can pick your brains. But I think one of the things also that, just as you were talking, that struck me was around inclusivity, because of course when we're looking at value from the data, that might to incentivize, I suppose, third-party providers to come into the market. That doesn't necessarily mean that those people on the lower margins are going to be attractive. So how are any ways being thought about how to kind of square that circle?
Yeah, well, I don't know what they're thinking about in terms of doing this from a smart data perspective, but being able to reach a section of the population that are previously underserved creates huge value for businesses. And we've seen that, I mean, some good examples very early on. Vodafone and I think it was Experian, they enabled Vodafone shops to offer mobile phone contracts to thin file consumers, so people with not a good credit history. Previously they had to buy pay-as-you-go, which is more expensive than a contract. But by using early open banking, they were able in store to make a better judgment on somebody's creditworthiness and offer them a contract. And they increased the number of people that they could offer contracts, and therefore customers, significantly. And if you're the first mobile phone operator to offer that, then people vote with their feet and will walk to your store to become your customer. So there's huge value in that, and access to open banking data makes it much easier to underwrite the risk and more efficient as well. So it costs less to work out whether you can offer credit to somebody. Talking about another credit bureau, Experian have a product called Boost, and they've been able to significantly increase the number of consumers that they can enable lenders to lend to. So, I mean, this is just a credit example. Credit's a really good example for open banking. But if you're reducing the cost of acquisition of a customer and you're increasing the pool of customers that you can serve, that's just good business sense. And you're creating other efficiencies as well internally, which reduces your costs and improves risk management and so forth. So overall, I mean, this is one of the things I talk about quite a bit in terms of use cases for open banking when people are looking at the value versus cost. Don't just think about what you can charge for in terms of new revenue streams. Think about the efficiencies you can gain and the reduction in things like fraud and so forth that you can enable, how you can speed up onboarding new clients. All of these things create value for you. It's not just about what you can charge for as a product.
Great. I think that's a fantastic note to end on, not least because I'm sure we can talk about this for many, many hours, and you've already given me ideas for some further follow-up webinars perhaps and conversations. So thank you so much, Marie, for your time. It's an absolute pleasure to have you here and actually to meet you in person, because it's the first time that we've actually met one another. So until the next time, it's goodbye from us.
Thanks very much, Sam.